Welcome to the Unit Economics Podcast. I'm Josh Stabinsky. On today's episode, I sit down with Matt Hassett, founder of Loftie, a consumer sleep tech company best known for its design-forward connected alarm clock aimed at helping people use their phones less and sleep better at night. In this conversation, we talk about how the business actually got off the ground, including what it took to move from an initial concept into a physical product, how Matt got the first units manufactured and into customers' hands, and what it looked like to build a hardware company without venture backing. We get into the realities of working with overseas manufacturers, managing inventory and cash flow, and trying to grow while operating with real capital constraints. We also spend time on how the company's evolved since those early days, expanding beyond a single product into a broader set of offerings. And a big part of today's conversation focuses on tariffs. We talk about the impact they had on the business, what it actually means when your costs effectively triple overnight, why relocating your manufacturing presence is not as simple as it sounds, and how those constraints forced a meaningful shift in strategy, including moving a large portion of the business toward international markets. I learned so much from Matt, and I hope you enjoy the conversation as much as I did. Matt, thank you so much for taking the time to do this today. If you wouldn't mind just starting with a brief background on yourself, that would be great.
Yeah, sure. Thank you for having me, Josh. I'm Matt Hassett. I'm the founder of Loftie. We're a consumer sleep tech company in New York City. I grew up in Washington, D.C., and I've lived here in New York for quite a few years now. Ended up doing this out of a entrepreneur in residence role at IDEO, the design firm, which really changed the way I think about products and services and most sort of problem solutions.
I'm a big fan of IDEO in general, and I'd love to also briefly hear about what you took away from that experience and how that's influenced your approach to design and to product development before we get into all things Lofty.
Yeah, so I think what I would interpret as the essence of figuring out a problem the ideal way is to observe people and talk with them and understand what kind of hiccups they're running into. So it might not even be a problem that they know that they have, but just going to do what's, commonly called like design research or human-centered design. It really means like interacting with people like in the environment where the problem and solution occur and really understanding what the limitations are of the current process. So for us with the alarm clock, like skipping ahead to when I was building a product, like we actually went to people's homes and we asked them, how do you wake up? And like, we would be like in their bedroom and understanding, how they wake up, how do they go to bed? And then like one thing we noticed a lot was people would put a t-shirt or something like over a DVD player, like back in the time we were doing this, or like a cable box or something, they would hide that. So that turned into a blackout mode feature on the clock. Like it's not the alarm clock at the hotel where like, you're like, oh my God, I have to unplug this thing. You can just hold down the snooze button and ours goes completely dark. But that's an example. And I think the most transformative thing for me was just the people at IDEO and the friendships that I've built from the 3 summers I spent at the New York office and just learning from people. And now they're my friends and colleagues, and many of them have worked on Lofty, the industrial designers, both the clock and the lamp, and our creative director, all IDEO alums.
So, what did the Entrepreneur in Residence program actually entail? Were you tasked with creating an alarm clock from the start? Was this a problem you came in wanting to tackle, or did this come to you through that program?
Not at all. And to call it a program would be a stretch because it was really them being nice to me to invite me back to hang out in the New York studio. They were very accommodating. It's not something they do a lot. And I don't know of a formal program. There definitely wasn't in New York, but I had hired IDEO in my previous job. I was working at a nonprofit on behalf of New York State, and we were helping homeowners in New York City understand the impact of flood insurance and rising flood risk in New York City after Hurricane Sandy. The lead of the project joked that I should come back as an intern or something like that the next summer because I was going to grad school. And I then did ask one of the directors of the New York studio if I could come back. It was 2017 and it was the summer of crypto and everyone was thinking about what is crypto. And it started out, I'd never tell this version of the story because it's super wonky, but this is the Unit Economics podcast. So I feel like I can go there. But the first iteration was something called Quiet Coin. It was actually a joke of a token that would kind of price the value of time offline. And so that is how it started. I was just kind of goofing around and thinking about that. And then that became over the course of the next year when I was in my second year at the Harvard Kennedy School and taking a lot of classes at the business school. I was thinking about how to turn this into an actual product. And it became something called Deliberate, which was drawn from I Went to the Woods to Live Deliberately from Henry David Thoreau. We ended up doing a prototype app at IDEO. And when I say at IDEO, I mean me at IDEO. I don't mean IDEO making it. So this was always me just being at IDEO. We prototyped it within the office, and basically you would budget how much screen time you wanted per day. And then if you hit that goal, you would get points, and then you could redeem them for rewards in real life. So it was sort of like tying in kind of a guilt group or Groupon concept of getting points for taking some kind of action and then redeeming those for rewards. And that kind of creates a two-sided platform with advertisers. But that in the long run felt like a tough thing to keep going. I was learning about diminishing motivations of financial rewards in my behavioral economics classes. And I was just envisioning like a team of 12 salespeople having to call all the smoothie shops in Manhattan and Los Angeles. And I was just like, this is not the company I want to build.
So how did you go from currency to alarm clock?
Part of why the first approach sort of died on the vine is that at the time, Apple made it very, very hard for one app to know what other apps or the phone generally was doing. And since then, they've rolled out Screen Time and the Screen Time SDK. So an app can now see some very limited data. And actually, even now, the app really cannot actually import that data. Like only the user can see their own screen time data, even if it's in a third-party app. But even that functionality was not allowed at the time. So it was very, very complicated to try to even keep track of how much time someone was using their phone. But now it's much easier. And so now we are actually iterating on that concept, and we have a whole new part of our business that's more centered around that. It speaks to the fact that this has been the problem from day one, is how do we get people off their phones? That's really where it started. It didn't start out, we need a better mousetrap, we need a better alarm clock. It definitely didn't start there. The alarm clock was a way to tackle the problem in sort of a vector that I could actually control, where I didn't need Apple's permissions for everything. And I was taking that sort of IDEO mindset I was describing with observing people, and how they're actually going about life, not just like some hypothetical, but actually observing. And so realizing that the worst time to be on your phone is before, during, and after going to sleep. And so the humble alarm clock had been discarded with the advent of the iPhone. And everyone said, great, I don't need this thing anymore. I can bundle it in my phone and I can bundle everything in my phone. But when you do that and you bring the phone into your bedroom, you kind of leave this window open through which anyone can come in anytime. And so you think, I'm going to just take my phone and I'm going to do a headspace meditation. But then your boss texts you, or you see a tweet that enrages you. So instead, if you unbundle that alarm clock function and also some of like the modern functions, so we didn't want to go back in time. We didn't want a device that was just an analog clock. We wanted a connected device that could include content, it could include a white noise machine. It even has a Bluetooth speaker that you could put your phone in the other room and listen to, a great podcast like Unit Economics.
Oh, I appreciate it. So the problem is clear to me. Was your thinking that if you designed a beautiful functional alarm clock, that would be enough to compel customers to purchase it? I guess my question is, why not just use whatever alarm clock was already on the market?
Well, we were totally open to that because at first we were actually thinking about it as effectively a digital detox kit. Like we did one of the analogous research experiences we did. We ordered the Sakara juice cleanse and the meal kit, and we did that for 5 days or whatever. And we looked what was in there. We got the drops that go in your tea and the Palo Santo sticks. And then I brought a physical box in the office. This is me and one other person, our first creative director. And we thought, like, what would go in here? What would go in this box? An alarm clock was a pretty obvious first thing, because then you could replace it. You could replace the phone at night. And so then we looked at Amazon and tried to find one we'd actually want to have in our bedroom. And there was no good option. They were all ugly and they were all dated. and none of them had been designed sort of in a world post smartphone. Like we actually wanted some of those features that the smartphone has. We just didn't want everything else that comes with those features. And then I talked to a few other friends, and I was getting early signs that I might not be the only person going through this. And so it was pretty clear that there was enough of a problem here. The other thing that really validated it for me was just talking to colleagues at IDEO and just friends and hearing things about their online, offline experience. And so someone at IDEO at the time was really upset about how Facebook was monetizing his data and had gotten off of Facebook completely. And then another person, I remember her saying that she was deleting Instagram on Friday and putting it back on Monday because it was pretty addictive. And now these things are pretty commonplace. I think we hear about stuff like that, but they were a little early in 2017.
My girlfriend purchased, actually, she got it as a gift, but she chose the Loftie over a Hatch purely because she just likes the design more. We've been using one for a few years now and we love it. But yeah, the thesis makes sense. From that point forward, what did it look like to get your first units in hand? And how did it look to start distributing them? And I think part of what is so fascinating, so compelling about this business is that really up until recently, it was entirely bootstrapped. And to do that in hardware is really difficult, right? So, how did you think about production, inventory management, distribution, and financing early on? What did that all look like?
Big question. You mentioned Hatch and choosing Lofty over Hatch, and thank you to your girlfriend for that. Hatch is originally Hatch Baby, and they made products for babies. They branched into adult, actually right at the same time that we were bringing our first prototype to CES. And so that's the first thing I thought about when you were saying this, is that I went out with this horrendously ugly works like prototype, and we had a looks like prototype that looked okay at our little booth in Eureka Park, the startup part of CES in Las Vegas. And I went to the media preview event, which is the first thing at CES. I saw that Hatch was there, and I walked by the booth and I was like horrified to see that they had an adult version of the clock. They're now on like their third design of the adult product, and we're on our first, which is, I think, a good sign, because our design, we spent a lot of time on it and every choice is very purposeful. The designer of it, Greg Woolos, is incredible. He's also designed a lot of the Simply Safe products. He has a background at Boeing, obviously at IDEO, and the clock and the lamp are both sold at the MoMA Design Store. And so, for the design professional, and that was our first market, just because it was so beautiful, that was just an easy fit. So creative directors, photographers, lots of designers. But yeah, I guess I remember calling a friend, and her dad is a big venture capitalist. And she said, it's okay. It means you're not too far out on the branch alone. And it's good that there's another company that's doing something like this. And it means you're onto something. And so I just kind of breathed a sigh of relief and thought, yeah, okay, there's a lot of nightstands in America and in the world. And, there's room for two people to innovate on the alarm clock. And they're way bigger than us, and they've raised a lot of money. Unfortunately, I think, and I don't really know much about their business, but I've talked enough to other people that, were their investors before. And that business and several other hardware businesses have done sort of okay for these venture funds, but it meant that by the time I had real traction, it was very hard to raise venture money. And so this isn't some high-minded choice that I made, like to forego venture money. It's more that most venture investors don't want to touch hardware, and they just sort of quote the hardware is hard trite phrase and just don't want to deal with it. And they think, oh, I don't do that. I only do food. I only do like protein bars or whatever. And like, so if you're a protein bar or a green juice, like in the consumer world, it's easier to get money, less so now. But I really missed the boat on the easy money train. Also, I missed the cheap CPMs on Facebook advertising. And so if you were Casper, or not that Casper's done particularly well, but if you were one of the early Allbirds, again, hasn't done great. And this is why it's so hard to get consumer money, is because all these companies were just flooded with money without good unit economics. And so we have had to earn the right unit economics that have proved to be actually scalable, all the while being told, oh, well, just get to this metrics or that. Or, I think the hardest part of being a bootstrap company that also is open to taking investor money is being both profitable and growing. So if you do one, you're closing out one side of the financial landscape out there. If you prioritize profitability, you are not going to be taken seriously by venture investors because they're comparing you to a software company that can spread like wildfire, where you have actual, huge manufacturing constraints. Whereas if you prioritize growth, then lenders won't lend you any money. So I've had to sort of go back and forth between those very different aims, and it has taken us longer, but it has ended up building a business where we can actually be break even and profitable eventually. But I wish that there were more investors out there and even just more lenders who were, and frankly, for banks to actually do the job they're supposed to do, which is to lend money to small businesses. And we have never received a bank loan. The best credit we get, won't be popular with a lot of people, but the best credit we get is backed up by the government of China. They actually have a very helpful program to help finance inventory. And without going into that whole topic, there's really no manufacturing capability for consumer electronics in the United States. And even if there were, it probably wouldn't have kind of an infrastructure, including financial infrastructure, that China and other advanced manufacturing economies have.
Yeah, that's fascinating. I feel like we could spend 45 minutes just talking about financing. But given the limitations, how did you go about getting your first batch of units in hand, and how did you navigate that in the very early days? Before we get into, the subsequent decade or so, the lessons learned from like day one, I think are often really interesting.
Yeah, I was very fortunate. My grandparents had left me a small amount of money, but enough to get started. And so that paid for the first costs, like hiring this firm that I've worked with and probably a lot of other companies on unit economics will have worked with over time, Doris Dev, that is based between New York and Hong Kong. And they're experts in engineering and supply chain. And so they helped me to take the industrial design that I'd worked on with Greg Wolos from concepts and 3D printed prototypes to works like prototype, and then a works like looks like prototype, and then beyond. And so that was the first part of it. And then simultaneous to that, working on the storytelling with people that could help explain, what it was we were building, because we didn't want to we weren't trying to do this just to have a cool hardware product. We really didn't care about that. That's kind of like an outcome of the goal, which was to help people use their phones less and help people get better sleep. And so we wanted to tell the story accurately and make sure that the reason why we were selling this product was clear to our buyer, our consumer. And for that reason, we started out on Indiegogo, which is a lot like Kickstarter. And we tried to tell the story of what this device could do for you and kind of what our Lofty brand was ultimately about. And I have mixed feelings about that. I think it was good because it showed there was demand, and we sold, I think, about 2,500 pre-orders. And so that did raise significant revenue that we could then pay to our manufacturer to make the product. I think the downside of doing crowdfunding is that you could never make that customer cohort happy. They will always be upset by something. And so in our case, like the two things that come to mind, one, we were doing this during COVID. So it's 2020. We launched the campaign in June. We said we could start shipping them in October, which was obviously very aggressive, especially with a lot of the world being shuttered. But we said that, and then we started shipping them in November. Some people that were like the later buyers, got them in December. The people were so upset that it was, a month, or for the later people, 2 months late. And so you take that customer support so seriously. These were my first customers. Everyone was so eager to get it and anxious. I mean, everyone was so anxious that whole year, of course, and people were spending money on their homes. And yeah, there's supposed to be sort of this forgiveness and understanding and as a backer of something, but in reality, people just want their thing. So we went ahead and paid for air freighting all of this, which is really expensive. So, it's just an early introduction into customer support and understanding what's possible. And I kept doing that because one of the problems with inventory financing that's fickle is that you're not able to build up enough inventory at your warehouse. And so you're constantly running out. And so in the early years, we would not have enough inventory. And then at holiday, especially, we would keep exceeding our projections. And then, we would have to air freight more inventory. So it's a bad loop. And that's one of the reasons that VCs don't want to touch anything with hard goods.
Have you closed that gap over time? Have you smoothed out the spikiness in the inventory over time?
For the most part, we have.
I guess what were some of the most fruitful tactics in that regard?
It was very hands-on early on. One Christmas, I drove out to JFK Airport every day for 3 days or so and made friends with the expediter, not the expediter, but like the lead guy at one of the airlines. And our container was just like stuck at the very back of it. And I was just like, please, we've got holiday orders. Like, I have to get this out. And so a lot of it is just like very hands-on and like just like begging your freight forwarder to make sure that your container gets out of the mix. So there's a lot of that, but that's like, if you're doing that, like you've kind of failed already. But for me, I didn't have deep pockets to finance lots of inventory. And so we were stuck kind of like at the front lines of it. Longer term, it's involved finding a lender that understands, seasonality and understands like that we need more money at the later half of the year to be able to finance a huge surge in inventory. But it took a long time. There's really not a lot of great options. The lender we have now, they do understand that and they're very easy to work with, but it's very expensive money because they have to borrow it from private individuals. They're not a bank. And so someday we'll have a bank line of credit that can let us build up more inventory here. That's a lot of what happened for a lot of companies with tariffs. I'm definitely jumping ahead of my story, but when you don't have big inventory here, any change in the supply chain, like some tariff, your consumers will see it much, much faster. And so we're just unfortunately very exposed to international trade. I'll talk about that more later.
Yes, I really want to get into international trade. I really want to get into tariffs. I feel like we'll spend the second half of the episode just on tariffs. But to tee that up, as the business scaled, as you grew over the following 4 or 5 years, let's say, what assumptions that you had were challenged and what did the subsequent few years look like as a result of maybe needing to change your strategy or respond to something that you just didn't foresee or had maybe some incorrect assumptions about?
I think one was I kept thinking that if I could hit the thing that the investor I spoke to last, said, come back when you get to there, that would have any impact on whether or not they would invest. And it doesn't. So people, I think a lot of investing is very gut driven, but people make up reasons to say, I don't like it because of this or that. It was a lot of like, well, come back when you have 1,000 orders or come back when you have 10,000 or 100,000. And so we've hit all those milestones, but at the end of the day, it's just like most investors don't want to invest in hardware. And so kind of getting over being a VC backed company was part of it. Just realizing that was a waste of time for me, that we had something people really liked. Some VCs didn't get it, and that's fine.
Yeah. So as a result, then, what did you prioritize? What channels did you think about most when thinking about taking the business from point A to point B between, let's say, 2021 and 2024 or something like that?
We are really product people here. And so we've just focused on listening to customers and understanding what else they want in the products. And I really didn't want to have a subscription for the product. And so for many years, there was no subscription. And then when AI started to become more relevant, we added a subscription product that was something entirely beyond what we had offered before. So sort of the reasons why we needed to change that is that there's only so high a price that people are willing to pay for anything that is in the realm of being an alarm clock. And yet the cost to make this fairly advanced electronic is very high. And then we've also got to support years and years of connection and cloud updates just in order to do the thing that seems really basic to a customer, but being able to use an app to change something on a physical device. We have to have software that goes from your iOS app to Google Cloud to AWS to your device. And then Google and Apple are changing those things all the time and breaking your code. So in order to keep that simple experience, like there's actually a lot of investment that has to go into it. And so to sell something once is very hard to reconcile with that actual product need. And so when we did change it, I wanted to make sure that the service we were offering was something beyond what we would offer before. And so you don't need the subscription. If we did offer a subscription, I want it to be something new. And so the first thing was this magic story maker where you could create a bedtime story and send it to your clock. And we were really early to that, so much that Wired was calling it like one of the coolest or most magical features of AI they'd seen. So we're just like constantly experimenting and trying things, and we're very early to different ideas. And so I think that's one of the bigger changes. And now that's becoming a totally different product, actually. But it's been an evolution.
Okay, so it's 2025. The business is doing well at this point, right? It's early 2025.
Yeah, we'd hit profitability, and
Right.
things were growing, and things were in a good place. Yeah.
Right. That's my understanding, is that things were solid and then tariffs hit. And I came across a Business Insider article titled, "I'm a founder trying to save my company from the impact of tariffs. I've got 2 months." I think that speaks for itself. So please, in as much detail as you're comfortable with, walk me through the havoc that tariffs wreaked on the business and how you have subsequently tried to combat the effects of tariffs. And now, when we had scheduled this interview, we were in the thick of it, right? It's been a couple months. The Supreme Court ruling might have changed things. So I'm curious how you reacted, how you responded to tariff madness initially and over, the following several months. And now how you're reacting to the latest Supreme Court ruling, and how you're thinking about things moving forward.
Yeah. So we had been hard enough hit by tariffs with our lamp even before this, because there are some what are called Section 301 tariffs from the first Trump administration. And so our lamp, like out of the gate, when we launched that, had a 29% tariff or so on it. But then between April and the end of the year, in 2025, the tariffs at one point on one of our products was up to 180%. And I think just making sure that that like resonates for folks, it doesn't feel real until you see the bill like coming out of your bank account, your business bank account, and you don't really understand it. I took lots of economics classes at the Kennedy School, and it was very different drawing the graph and looking at where the tariff went, some of that very abstract. And I thought I'd never have any real world application. I was like, this is the 1930s. No one tariffs anymore. It's like we're in a globalized economy. This is quaint. But when you have a 180% tariff, which is basically 200%, and so that's really 3x the price of something. If we were going to ship a container worth $100,000, it's actually, we've got to pay $300,000 to take possession of that container. And that's before we've sold anything in that container, because we've got to stockpile some inventory. And so why Tim at Business Insider came up with that headline is that that was roughly how much inventory we had in our warehouse, which was pretty typical. I mean, many bigger companies had more inventory, and companies that maybe anticipated Trump being far more aggressive than anyone, and then most people expected, maybe increase their inventories further. But we didn't have the balance sheet, to go back to the financing question, to increase our inventory that much. And we've got expensive products, and so we just couldn't afford to front run that inventory. But a lot of companies were able to do that, and that's why one of the reasons economists have noted that there hasn't been as immediate an increase in prices is because a lot of that inventory that was selling through most of 2025 had actually been in those warehouses before those tariffs were imposed. I definitely spent a lot of time thinking about just, could we change something about the way our product is made or where our product is made? I, of course, looked into making it in the United States. Really not possible. Even if you assembled it here, all of the components are from Asia. There's just no other place those are made. And so you'd still be importing those components. And the problem with the tariffs we have now, which are on all goods, regardless of whether they're an input, an intermediate good, or a finished good, is that it really actually disincentivizes making stuff here too. And so you couldn't move the machines here without incurring a tariff. You couldn't move the, inputs, the product, like all the semiconductors and all the chips, all the little transistors, like the speakers, none of that's made here. So all that has to be imported. So that didn't work. And then I thought about our longtime manufacturer bought a factory in Thailand, and they worked hard to get that up and running. And one of their other customers, which is another similar device to ours, moved a lot of their production there. And that was probably a mistake for them. And we didn't do that. We did a pilot run just to make sure we could do it there, and it was a backup option. But towards the end of the year, I felt pretty good about staying in China where we produce, because the tariff on China had come down to 20%, and the tariff on Thailand was 19%. But it actually cost 20% more to make it in Thailand, because everyone was trying to hire very limited labor in Thailand. And then all the components had to be shipped from China, because that's where all the component factories were. And so it was actually a 39% cost increase to make it in Thailand versus 20% to just pay the tariff, keep going from China. Now we're down to in some cases 10%. It'll be 15% probably by the end of the week on every country in the world. No one talks about the carbon footprint impact of tariffs, but that's not good either. It really warps the decisions people make, both financially and environmentally. And you make all kinds of weird decisions, which is exactly what economists tell you that taxes do. And tariffs are taxes. And so I could have spent no end of time trying to navigate this. And maybe we could have just like figured out another product to sell, but we have lots of consumers who want to buy our product, and it has great product market fit, and everything was going so nicely that I realized that you could either change supply or demand. And so I had no control of supply, because we're talking about a government that changes policy literally overnight. And so I instead focused on demand. And so at this point, vast majority of our sales from our website are in outside of the US. Over the course of 2025, we went from like single digits to now like high majority outside of the US. So Europe, the UK, Canada, Japan. We're working on adding Australia later this year. And there are very stable, predictable, reasonable trade policies. And it has been the saving factor for our company in this time. And ironically, to keep a US majority team employed. And so it just became too maddening to cope with that, and such a huge tax on my mental health. I feel very responsible for our very small team, but those are people that I employ and that I pay for their healthcare, and I couldn't possibly risk their jobs over this just up and down roller coaster.
I want to make sure I heard you correctly. You said you went from low single digit sales internationally to now your international sales make up the majority of your business. Is that correct?
Of our business through Shopify on our website, the vast
That's
majority of that.
remarkable to me. That's absolutely insane. How did you do
Yeah.
that? Like, tactically speaking, how did you do that? Because to me, that's not like, it sounds like you've done that very quickly. And to me, I would have
Yes.
intuitively thought that is not a lever. That's not a switch you can just flip. How did you actually tactically go about doing that?
This will be an ad for a couple of companies effectively, but we had two really good partners and one really great team that was willing to completely rip up the business we had built and build a whole nother one. We are at this point, I believe we're 7 people. People think we're probably way bigger, but right now we have 7 full-time employees. 2 of them actually now live in Europe, one in London, one in Spain. And so that helps to have people living in Europe, just to be on the time zone and to be understanding our customers there, and also investing. I don't want to just, kind of parachute in and just say like, help save us from what's going on over in this country. And so one of the big priorities for 2026 is just investing in Europe. Like I just greenlit a Venice Biennale activation. It's also so much more fun. Like we were like so excited with how well it was going that we did this trade show in Paris, Maison L'Objet. We had a happy hour at a pub in London. Our marketing director in London is doing Pilates classes with like women in tech in the UK and all these other events. And so it's just I want to really like make it our priority in our marketing as well. And we have on the advertising spend front, but I don't think that's enough. And it's not fair to our customers there who are now really the reason we're able to stay in business. And so I'm just mostly like overwhelmed with gratitude that like it is working there. And it wasn't a given, and I wouldn't have pushed unless it had been such a necessity, because what I remember learning in business school classes is to start with the biggest market first and then slowly open up other markets. But I think that has changed, especially if you have a good like ours that is both fairly expensive and pretty small. So it can be shipped and it makes sense on the unit economics. You picked a good word for your podcast name. You say it a lot in these interviews, but we worked with a company called Portless that handles all the logistics of shipping to customers. And so we're able to get orders to customers fast and affordably, and we're able to pay all the duties on them so that they don't have to worry about that. And we're able to do that without going into the red. And so if we were shipping all this from the US with tariffs, with FedEx prices, we would be losing money on every sale. And then also our advertising partner, CTC or Common Thread Collective, we went from being focused on the US to focused abroad. And a lot of we're in this thing, their Global Accelerator program, which is all remote employees outside of the US. And so our media buyer is in Latvia. And so there's nothing, that makes him especially qualified to do media buying in Europe because he's in Latvia, but it doesn't hurt, certainly for the time zone and just for understanding the diversity of cultures and not being myopic about these are the holidays that we have in the US. So you got to understand a lot of different cultures and test ads all the time and also localize. So our website is now in 4 languages and we want it to be in at least a dozen. So that's part of, that's like the operational side of it. But survival really makes it easy to motivate, all of us as a team. And then also for it to start working and to see it working. And actually, I'm even hesitant to tell my peers here in the US, but I think it's a lower cost marketing right now, at least for us. We've managed to lower our customer acquisition cost, which has brought us back to profitability, even in just one of the worst times to be in the consumer business. Probably not as bad as to be a SaaS company right now, but not great.
Different story, but still, I mean, that is truly remarkable to me. And it's proof for, if and when relations in the US and the sort of business climate in the US stabilizes and calms down, it's more fuel when you go back out to investors to say, look, this is working. It was working. It is working. Let's do this. On that thread, on that topic, if you were to raise capital and raise meaningful capital, let's say tomorrow, how would you prioritize it? What would you spend that money on immediately?
From the things we've just been talking about, I think inventory. So I never had to worry about going out to JFK and making sure my inventory is there to get customers their Christmas presents, which is not what your VC wants to hear, because you shouldn't use VC money for inventory. I would use it probably for new product development. There's a few things we're working on that I really am excited about. But yeah, to the point you just made about the international growth and how it'll eventually compound. We haven't given up on the US in any way. And so we still sell here and we have a large Amazon business here. And we're only just starting to expand the Amazon business abroad, which takes a lot more logistics. But last year, despite all the headwinds, we had 26% year over year growth. And, if you take the trailing 12 months starting in July, when we really started to get going international, I think we could probably see like 50% or higher growth year over year.
That's crazy.
Yeah, it's been great. Thank you to the Trump administration for pushing us to expand.
It's fascinating to me, though. It's so interesting to me how many case studies there are of other businesses where they thought they were on the brink because of COVID, for example, and they realized, oh no, this is actually going to be like what sets us apart for these reasons. And we just need to shift this in our strategy, or we just need to like optimize our spend differently, whatever it is, right? How often incredible companies are born out of or make a step change through really difficult times.
Yeah, I think that creates great companies. And I think you hear that a lot about companies created during recessions. VCs talk about how those are some of the best companies and enduring companies. And then companies that are bootstrapped also, I think, it really irons out the unit economics because there's really no other option. It was a very hard year mentally. It's just the weight of people's jobs being on you is very, very tough. Because I could start something else, or I could, find another job. But I really felt it like for the people that I've hired and that have trusted me to lead them through, whatever comes. So that was the most stressful part of the tariff saga. To go back to your question about sort of what would you do next, I've I don't count on investor money. If someday I find the right investor and we do want to expand significantly, I'm open to that. But I no longer think of it as like a critical step because we've managed to create like a pretty nice flywheel of growth and expansion just with our own hard work. But if we did, if we had this new source of money, there was a couple of products I'd work on, like one that I'm bullish about. I have sleep apnea and the CPAP machines
Mm.
are ugly, don't work well, antiquated, a lot of improvement there. And there's huge underdiagnosis of sleep apnea. And for me, it made a huge change when I realized I had it and that it could be treated. My energy soared and I no longer fell asleep in a dark room. So that's something I would love to do just personally. And one of the heroes of mine that I look to for consumer goods businesses is James Dyson. And so
Hmm.
I think like, what would he do? And he would like solve the next thing that irritated him. And for me, that's like these stupid CPAP machines. But what we're doing now without, endless warehouse of capital is working on our software business. And it has its own taxes, which are paid to Apple. And so your first $1 million, you pay 15% to Apple. And then after that, you pay 30% to the App Store. But on the other side, you don't have to finance inventory. Tim Cook, I believe I'm getting the quote right. He said something like inventory is fundamentally evil. And I think he's right about that. And it's really hard. So like if you can make software products, great. And so we're really focused on app blocking because apps are getting only more aggressive and consuming our attention. And it all kind of comes back to how I started this company. Walden and Henry David Thoreau, he went to the woods to live deliberately. Deliberate was our first name. And so he was freaking out in the mid 1850s about the railroads, and then also like signs in his hometown. He like hated advertising. So he would be losing it with Instagram. But I think there's more and more appreciation of how distracting all of these products are and how they are just keeping ourselves from being ourselves. There's a lot of it focused right now on how it's impacting kids. Jonathan Haidt wrote a bestseller, The Anxious Generation, all about this. People are writing books left and right. There's a ton of pressure on the big tech companies. They're doing sort of half steps. They're doing teen accounts. I see the Instagram teen account ads, and it's sort of like you don't you don't know how to feel about it. It's like they shouldn't have any accounts if you're listening to what Jonathan Haidt is writing. And there's just so much missed childhood. I just think about like I would go to summer camp and we didn't have mobile phones at the time, but B, like they definitely wouldn't have let us have them because it's so important. You learn how to navigate conflict. You learn like how to develop friendships. You learn how to solve things without calling your parents to figure it out for you. And all those things we're missing out on our kids developing those skills. And then we're missing out on ourselves. We're missing out on like waking up and actually saying good morning to your partner or good morning to your dog. Like you're just like
Yeah.
right in other people's problems. You're like dealing with the emails you got from a few time zones ahead because everyone's remote working and we're just never making time for ourselves.
I'm very bullish on this space thematically on getting people away from smartphones. I put out an episode recently with Joe Hollier, who's one of the co-founders
Yeah.
of the Light Phone. So for listeners who are interested in this theme and this topic, I highly recommend that episode as well. I see a lot of similarities in how you're thinking about the problem, how you're thinking about the space.
Joe and I did a panel we organized at last year's New York Tech Week all about this topic. And we had some friends of ours that are a small mom and pop shop called Dumb Wireless, and they sell dumb phones. But yeah, there's more and more interest in this.
Yeah, for good reason. I think we have time for one more question. What's something you've changed your mind about since starting Lofty?
That's a tough one. I think I've changed my mind about needing a big team or a big budget to have an impact, because it's so cool when you meet someone and they say, we have your product at home. Or like I was looking at a apartment a few years ago and I went into the bedroom and I asked the current tenant, I said, oh, the Loftie clock, like, how do you like it? He's like, I love it. It's amazing. Like, here's what it does. And I was like, I'm actually the founder of the company. And people are like blown away. They think we're this big company and we're, less than 10 people at any time here in Tribeca in New York. You can still have a major impact even without getting tons of venture dollars and hiring tons of people. And I think that's something I'm really excited about for our business and excited about for many businesses with AI. And I think that is where companies are headed. There's just so much potential to start companies and grow them faster and to get rid of the gatekeepers of the VC world. But with the tools that Claude and other AI platforms are making available, you read a lot about people, there's going to be $1 billion company by one person. Like maybe there'll be a few of those too, but like, I think even just like $1 billion company by a small team that's not 500 people, that doesn't need to, hire like a ton of people to make like a real product that makes an awesome impact.
Yeah, very timely. A great lesson. Matt, I can't thank you enough for the time. This was awesome. I learned so much. I really, really appreciate it. If you want to share with listeners where they can find Loftie, please feel free to do so.
They can go to byloftie.com, byloftie.com, or they can find it on Amazon.
Thank you so much for the time.
Thank you for having me. You asked great questions, sir.
Absolutely. I appreciate it. I hope you enjoyed the conversation. Make sure to follow or subscribe wherever you listen to podcasts so you can stay up to date with the latest episodes. Thanks for listening.